There's a couple things at play here. We do know that some profit is taking place in different various sectors, but that hasn't really begun in earnest yet. So we haven't seen the traditional downside that we see at this time of year. The Fed signaling that they're starting to taper off these programs also signals that the economy is strong enough at this point on its own. It's not happening right this second, but when they start to do this, the economy is showing the Fed that it is able to stand on its own, and that they've been kind of right on the money as far as the program that they put in place and the liquidity that they've been providing. So I'm pretty comfortable seeing what's going on right now. Fed, yes, is tapering off this program, and they are showing that, hey, we don't have to be on top of this 100%. But at the same time, there is the possibility that we're going to start raising interest rates. And the market took that as a positive signal that they weren't just going to do this all at once, and that the signal forward could mean we're going to have some rising interest rates, and that could cause a little bit more turbulence as we move forward. Has been predicting the market goes down for quite so many years. They had one analyst, and I remember because I actually worked there, they had one analyst predicting that the market was going to go down every single year, and a perennial bear. And I give him credit for being that bear, because it's not easy being a bear when the market's taking off and you're in a bull market. However, let's get back to the question. What happens is you need to ask yourself this. Okay, if the markets traditionally go down during this point of year, should I take some money off the table and look for new opportunity? That's not a horrible strategy. You can absolutely do so without hurting your portfolio as a whole. Just don't do it for the whole thing. I don't think that's a great idea, to go and sell the rest of your portfolio, and then all of a sudden the market takes off. Because last year that happened. We were all waiting for that big drop, and it didn't happen. And the market took off, and people who were in shorts really had to cover their shorts quickly. So my advice to you at this particular point, if you're thinking about it, maybe why don't you take some profits off the table, like the hedge funds, like the mutual funds are doing right now, and then come back smart and strategic and go get those low prices if and when that does happen, because you're going to be better for it, I believe. What are we going to say? We're going to talk about tech. Technology has been benefiting in good and in bad markets. You have companies that are such big dominators, your Apples of the world, the Microsofts of the world. They keep making money. They keep making phenomenal amounts of money. But then you got those tech companies that are like semiconductor companies that you say, well, there's a shortage of chips. And they're like, and they're still making money. So those are places that, in spite of the challenges, we want to still have money there. Cyclicals, the John Deeres of the world, the Caterpillars of the world, with the new infrastructure deal, that, some people have talked about that's in jeopardy and the like. But with those companies, they are going to benefit because municipalities and governments, should this infrastructure deal go through, are going to continue to benefit. They're going to continue to make money, and their companies are just simply going to grow their dividends, grow the stock price. Lots there happening. You can make money there. Cyclicals, this is more a value play. The value was supposed to take over. Value was supposed to come and knock everybody's socks off, and it didn't happen. There's still plenty of time where value can make some money for our clients. We believe that value is a great place to be, not necessarily, the typical companies that you would think of, but you want to do your detective work. You want to do your research. You want to be strategic about which ones you want to get to, and the ones that are going to really benefit in this particular market, especially the way it is right now, are the companies that do well in good and bad markets. And they're not that hard to find because they're big companies and they're strategic and they're really good at what they do. My honest opinion is you need to be past your research right now. You need to start getting into some of these right now. I am hearing from my counterparts in Asia, from my counterparts in Europe, that we're all in the US and getting here, we're actually a little behind on that alt market. So you want to make sure that you're past that at this point, get in, but know that you're not putting a ton in it. Please don't go past 5% at this point. I see some people just they're putting the house down on it. And that's not really the place you want to be right now. It's going to take a little time. But yeah, I see them with the similar potential that Bitcoin, Ethereum, and all these other big ones have had. The alts have the same potential. And I would not be surprised if we see a similar jump in these altcoins. And I can't wait to see it.